Hello and welcome. You're watching This is Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we help you understand all the latest trends of the stock markets, the way the trade is being panning out since morning. Also, at this point in time, which are the sectors and the stocks that are most buzzing in trade, the themes that you should be focusing on now, and the strategy that you should adopt in this new year. We will also discuss all of that with a very special guest who will be joining us very, very shortly. But first up, a quick check of the markets right now. Look at the Nifty. It's absolutely flat with a negative bias. There is a lot of choppiness that the markets have been witnessing in the first half of trading session. 17,907, that's the level at which the Nifty is hovering near. 60,157, the current level for the Sensex as well, up about 42 points. So you're looking at a mixed trade happening there as far as the benchmarks are concerned. Look at the broader markets too. Again, there is a mixed picture that you can see with the mid caps slipping into the red, about 0.2% of a decline right there. Also 0.2% on the uptick for the small cap index. For the India VIX, the levels are slightly higher at 15.5 in today's trading session. So keep an eye out on this index, because this was the index that actually helped us understand that the markets will turn incrementally volatile in yesterday's move as well. So today, the market breadth really favors the declines again. 33 stocks of the Nifty 50 down in the red today, as opposed to 17 advances. Which are the stocks that are creating a lot of pressure for the markets today? It's Bharti Airtel, that's down by 4.4%. Of course, after that downgrade has come in from JP Morgan. Cipla is down by 2.6%. Eicher Motors down again. Apollo Hospitals, Divis Laboratories, these are the big drags at this moment. As far as the gainers are concerned, you do have a far and few between stocks from a whole host of sectors. You have TCS now recovering from the losses of 2 days that we saw, 1.2% uptick for that one. HDFC Bank up slightly as well. Sun Pharma up by about 0.9%. BPCL up by 2% odd, as well as the top gainer on the Nifty pack. Hindalco seeing some slight gains again. In terms of the sectoral indices, as far as the Nifty is concerned, you do have a mixed picture here too, with the banks now inching higher with all the components, financial services, private banks, PSU banks up in the green today, after that sharp sell-off that we saw from the PSU banks in yesterday's trade. Metals are slightly higher in trade. IT is doing well, in fact, 0.9% of an uptick from that one. The autos are dragging in the slower lane, 0.5% lower, and that's amid the biggest auto show of the country, the premier auto show that's going on and is underway right here. Realty space slightly down, pharma sulking as well, about 0.5% odd. FMCG index, that's the one that's been low, trading lower, and in fact this index was doing well in the last couple of trading sessions, so you're seeing some profits being taken off the table. But how do the experts really see the market momentum from here on? Joining us is a very special guest. Mr. Hemang Jani joins in. He's the head equity strategist at Motilal Oswal Financial Services. Welcome, sir, and thank you so much for taking the time out for this discussion. He was wishing you a very happy new year and a 2023 filled with a lot of profitable trades, investments and success at both the personal and professional front as well. First thoughts on the markets, the way we have been seeing volatility panning out in the first few days of 2023, and does that indicate a trend going forward for the entire year too?
Yeah, thanks for having me and wish you all a very happy 2023. I think we've started 2023 on a bit of a turbulent note. And as our market still is trading at a very high PE multiple, about 22 times forward PE, and we are also seeing the interest rate environment getting a bit tougher, though a large part of the pain is behind us, but this higher interest rate scenario may remain there for a bit longer period of time. So we are seeing a bit of a underperformance when it comes to Indian market in the last, let's say, about 3 to 4 weeks. So depending on how the earnings season pans out, one will be able to take a call with a more conviction. But we think that the return expectations will have to be far more realistic and moderate compared to what we've seen in the last 2 years.
Yeah, so speaking about earnings, how would you really describe the earnings we've seen from TCS, and are there any expectations in particular that you would want to hear from the other IT majors that are slated to report their earnings this week? Wipro, HCL Tech, Infosys also?
So TCS numbers were okay. I think versus expectation, there were no negative surprises, and still we are looking at a 10% dollar revenue growth for next 2 years, and same will be the case with Infosys and HCL Tech. The only thing is that the management commentary will have to watch out very carefully about what sort of growth are we really looking at, because the market is clearly expecting about 10 odd percent kind of a growth. So if you have a negative surprise, then you may have a bit of a knee-jerk reaction. But by and large, numbers should be okay.
So that, which are the other sectors that you're betting big on as far as the earnings expectations go?
So two sectors we have a very high expectation. One is, of course, banking financial services. A large part of the growth which we will see in 23 will be driven by the banks, both PSU and private banks. So private banks, we're looking at 34% earning growth. PSU banks 44%. The other one will be auto, where the overall growth, continues to be good with some margin benefit as well.
Okay. Speaking about financials, let me also let all our viewers know that Credit Suisse has come out with a view on financials. It expects Q3 to be strong quarter for the banks and also sees further NIM expansion from here on. Healthy loan growth, asset quality trends are likely to remain benign, and larger banks, they believe, will continue to show better asset quality going forward from here. You talked about the private space. Let me also speak to you about the public sector banks as well. We've seen some spectacular moves in 2022, especially in the last quarter of 2022. But in the last few sessions, we've seen a considerable amount of decline right there, profits being taken off the table, banks feeling the heat from the public sector banks. How much longer or lower do you think this can take us? And is that a space that will show a lot of profit booking this year?
I think the overall PSU banking space will do reasonably okay. It will not do as well as what we've seen in the last year, but I think we should stay focused on to SBI, BOB, Can Bank. I don't think we should go too far in terms of the smaller PSU banks, because that is where when the market is tough, the performance may not be that good. But overall, we have a positive view on these three names which I have outlined.
Okay. And what about your take on the entire auto space, especially with this, auto show now underway? We are seeing some already, some footages coming in as far as the Maruti Suzuki's EV goes. And, that's the first one from their basket and slated to release on 2025 as well. Your entire take on that auto space and on Tata Motors especially, because yesterday we saw a spectacular move there on the JLR sales being quite strong, wholesale sales being better, brokerage houses being positive. And which is your top pick, say, for example, from the four-wheeler space, especially when it comes to the auto basket?
Yeah, so overall view on auto is very positive. I think we have to select the right pocket. So the passenger vehicle would be one category where the view is very positive.
Hmm.
Also, the CV, players, we have a positive view. Two wheelers is something that we are avoiding at this point because there is not much of clarity. And talking about the stocks, I think definitely Tata Motors would be one stock that we would like to go with at this point, mainly because of the combination of positive news flow on the JLR side. Even the domestic PV cycle is turning positive. CV cycle is reasonably good. So the stock has underperformed. So there is some room for upside over there. And as far as other companies in the auto sector are concerned, we would bet on two names. One is Mahindra. The other one is Maruti, because of the kind of product pipeline that they have and the response which they are getting. Even this in Auto Expo, we've seen Maruti showcasing a couple of models, and we think that in the last 1 year they've done a good work in terms of rolling out more products, and that would definitely help them in terms of their market share. So both Maruti and Mahindra are our preferred picks in the auto sector.
Okay, and in the run up to the budget, we usually see a lot of themes picking up pace. Sometimes fertilizers, the footwear stocks, the infrastructure basket, railways as well. Any thoughts on these particular sectors, and should investors keep them on their radar ahead of the budget as well?
So, Sakshi, when it comes to budget play, we would go with capex and the defense names. So, we think that Bharat Electronics, HAL, Bharat Dynamics, these are some of the stocks that you can buy not only from a budget short-term perspective, but also from a 2 to 3 year perspective. And infra and capex is another theme which is catching up big time. And so names like L&T, KNR Construction, these are some of the names that we can go with for that theme.
Right. Okay. Also, on the energy basket, what is your sense that 2023 will have for the entire energy basket? Nifty Energy, in fact, has been one of the rare sectors, apart from financials, which has been continuously giving positive returns year on year for the last 7 years. We've been talking about how Nifty has given positive returns for the last 7 years. It's Nifty Energy and the financials that have also given these positive returns. Can this kind of an outperformance continue? And is there something or particular stocks that you would be more, preferred on your basket as well?
So we may have a short-term run-up in names like oil marketing companies or Reliance, which have been underperforming. But given the intensified regulatory framework by the government, where they've put in place the extraordinary profits on companies like ONGC and Reliance. So that sector may not do that well, and particularly this quarter, we think that oil and gas is one sector which will drag down the overall Nifty EPS. So we think that one should take only tactical or a short-term call over here. Avoid taking very long-term bets.
Okay, and large part of the consensus from most of the experts I've been speaking to is that this year perhaps it's better to stay away from the export-oriented sectors. Is that also your view? And what should be investors' strategy on both IT, pharma, these kind of packs?
I think we should be a little more focused in terms of what themes we want to participate in. So, for example, the metal companies, the if you look at the export data, it is quite encouraging for steel companies. So, we think that given that China is opening up and we are seeing some positive traction in US also, the metal sector may do well. Also, specialty chemicals is one sector where the export data will continue to be good. So, apart from the IT and pharma, I think we should focus on, bunch of other sectors which are doing well given the China theme which is playing out.
Okay, in extension to the metals and infra basket that we've discussed, overall real estate space, what are your thoughts here?
So, real estate has been laggard for last almost 6 months now, but the overall view there continues to be positive, and we think that one should continue to remain invested. The preferred names over there are Lodha, Prestige, Brigade. These are the names one can really go with.
Okay. Also, there's this one telecom major that's been in news of late, Bharti Airtel, the top Nifty loser today. The shares have extended losses for 4 out of the last 5 sessions. JP Morgan has downgraded the stock as well to underweight from overweight. It has cut the target price to 710. Your thoughts here on Bharti Airtel, and do we see any bounce from here, or is this going to be a tough year?
So, because the stock has been one of the best performing stocks for 2022, maybe it can go through a bit of a consolidation or a little bit of correction. But I do not see a case for a significant correction or underperformance. I think we should use the correction, maybe another 4 to 5% as a buying opportunity, because we have to remember that the pricing on the data side continues to be very good. They've taken a price hike, but because of the higher capex and the 5G pricing not being so attractive from a company perspective, the stock may remain a bit subdued.
Okay. The last question to you, Mr. Jani, right here. Like, at the beginning of 2023, a lot of first time investors, a lot of fresh investors would be looking at reconstructing their portfolio, rebalancing their portfolio, maybe looking at adding a few more stocks. What would be an ideal mix? What kind of stocks should they be looking at to create, say, a 10, 15 stock kind of a basket for themselves in 2023? What would you advise?
So my advice would be that you go for the companies where there is a consistent growth visibility, rather than trying to do some quick trading through commodity companies or high beta names. So maybe something like a banks, IT, auto names, the top 2 or 3 names within each of these sectors. The consumption. If we create a portfolio around that, that will give you a lot of comfort with high stability. I think that getting into aggressive trading bets could be a bit risky given that the volatility is very high on a higher base.
Okay, well, on that note, thank you so much, Mr. Jani, for being with us on this show and sharing your views and insights on several pockets that we've discussed as far as the markets are concerned. And here's hoping to more conversations flowing in 2023 to seek more insights going forward from here too. Let's quickly look at how the markets are looking at this point in time. 12:45 p.m. right here, 60,106. That's the current level for the Sensex, down about 8 points odd. Flat with a negative bias and slightly volatile is what you would really describe the markets as. 17,900 breached on the downside right now, 18 points down. Minor losses for that one, but we'll have to see whether the second half promises to be better than the first half, and if we do see a considerable direction in which the markets really move forward from here. So stay tuned with us onto Business Today TV. Do not forget to subscribe to this channel and also stick with us via other social media handles, Facebook, Twitter, LinkedIn and Instagram. Many thanks for joining in.
The men and women who built Indian industry, and the young guns who are shaping tomorrow's India. From storied careers